All right, good afternoon, everyone, or good morning or good evening. I guess it depends where in the world you are. Let's just do a quick audio and slide check. If you can hear me, you can see the slide I've got up here. Just type a Y in the question box there. Just let me know that the audio and slide is coming through for you. All right, perfect. All right, great. So got a great webinar today for you. We'll be back in just about 2 minutes and we'll get started. All right, again, welcome everyone to this presentation hosted by FFR Trading. My name is John Madison. I'm the Senior Strategist here at FFR Trading, and I'll be your host for this special presentation with Lee Gettis. Just a reminder, a free copy of Lee's Precision Market Timing book, which is a $149 value, will be given to 5 lucky winners after the webinar, so stay tuned. All right, you should see the risk disclosure slide here. Folks, will you agree? Trading is risky business, right? Especially if you don't know what you're doing. We suggest you put your trading in the hands of a proven winner like Lee Gettis. We think that's a much better idea than trying to do this on your own. We're also in a highly regulated industry, so everything that I say and later everything Lee says has to be accurate. Just again, guys, can you see and hear okay? Somebody was just commenting that they weren't able to hear. Is the audio coming through? All right, looks like they're saying yes. Okay, all right, thank you. All right, here are a few questions for you to consider and ask yourself as we go through the presentation here. First of all, I appreciate and respect the fact that each and every one of you has taken the time, out of your day to be here at this webinar. But it also tells me something. It tells me that maybe there's something in your financial world that isn't quite going according to plan, right? Would you agree you wouldn't come spend an hour here if everything was perfect in your financial world, right? Whatever the case, we want to give you as much value for your time that we can. Hopefully provide you with the solution, for you to consider that may help get you back on track to reach those financial goals. All right, so what we want to cover today, And before I bring Lee on, let me cover just a few key pieces of information with you. First, we'll take a look at who we are here at FFR Trading and what our role is. Second, I'll give you some background information on Lee. It's quite extensive. I'll then hand the presentation over to Lee, and Lee will cover how he trades his precision trade alerts. After Lee is done, we'll take questions. I'll come back and we'll look at some of the trade academics of his precision trade alerts program, along with the performance of the program since inception. And then we'll review the educational material and everything that comes with the precision trade alert program and the exceptional offer that we have for you today. All right, first of all, who is FFR Trading and what is our role here? Well, we are a due diligence firm. All right, what that means is that we've been evaluating traders and their strategies for over 15 years to find real traders who make real money. So we sift through the thousands of strategies out there to bring you the best of the best. All right, and we do that because each trader and strategy has to go through what we call our 8-step certification process before that trader is allowed to provide their services to our clients here at FFR. All right, so some of those steps include a thorough interview process. We get the rules for the strategy. The traders have to have at least 15 years of actual trading experience. So we're looking for a veteran trader that's experienced all the different market conditions. We get a back test of the strategy and the trader's actual brokerage statements. Right? If they can get through all that, if they can make it through all those steps in the process, the final step is we run that strategy on a live account to make sure that the trades are executed properly, it performs as anticipated. All right, it's a pretty thorough process. I think you all would agree. All right, let's talk about Lee Gettis. Lee is a 35-year veteran of the financial markets. Many consider him the pro's pro. In 1988, he developed the renowned Volpat trading system, which at the time was ranked one of the top performing trading systems in the world by the prestigious Futures Truth rankings of the world's top trading systems. In 1993, Lee sold Volpat for $675,000 to a group of professional traders, including two big public funds, one of the largest banks here in North America. And in 94, he made public his market mapping technique. The market mapping technique improved the performance of every trading system tested by 4 times or more. That prompted the famous Larry Williams, the great commodities trader, to say it's the best I've seen for minimizing losses. In 1996, Lee began accepting students and shortly thereafter launched the Insider's Tip Sheet. In 2006, he gave the trading world the 5-step guide to trading profits, how I built a wonderful life trading the markets and how you can too, as his legacy. Today, Lee remains active in the financial markets through strategies like precision market timing and continues to help scores of other traders reach their financial goals as well. All right, everyone, let's not wait any longer. It is my pleasure to introduce Mr. Lee Gettis. And Lee, if you're ready, I'll get ready to switch over to you. And once Lee is done, I'll come back and go over everything that comes with Lee's precision market timing alerts to help you make an informed decision if this is something that you believe might change your financial life. All right, Lee, over to you.
Okay, guys, this is Lee, and I heard all he said about all this stuff I've done for a gazillion years. I think all that proves is that I'm really old. What I hope to give you guys today is something that you can actually go take and use on your own. I'll tell you how we use it, but it isn't necessary that you use it that way. This really is a tool that you can just do something with if you so choose. And because of that, I'll probably forget to mention parts of it. So please feel free to ask questions. I'm going to hang around and try to make sure everybody understands everything about this stuff. Okay. So first things first, look at, I'm sorry. First thing is, let me thank Genesis for giving me the right to show all these charts because they come from their software and they're really good about letting me just put them out there. And let's look at that big bar right in the middle of your charts. Everybody can see this, the one right in the middle that's clearly the biggest bar on the chart. It opens at the high and closes right at the low. Hopefully everybody can see the bar that I'm talking about. That bar, or a bar just like that, is what got me started on this particular methodology. I'd see these bars that are just as ugly as a bar can possibly be. I mean, you can't get much more negative than that price bar there, right? But then the market went up right afterwards. See, right this I'm talking about this bar right here for those of you who can't see. And then the market turned up from there. Now it's not the low. It didn't, make the low for 3 years and go up. Doesn't matter. That's a tradable low there. And I wanted to find a way to identify those other than just because my eyes saw them, right? So we came up with a definition, which is this. It's any bar that has a range that's at least 125% of the average of the last 14 has to close in the lower 25% of that bar's range and closes below the 3-period moving average of the lows. There's the definition. I'm going to go back to that chart and point some stuff out to you, okay? This is the same chart again, and we have two red lines on the chart. They're 3-period moving averages. The one up top is a 3-period moving average of the highs. The one on the bottom is a 3-period moving average of the lows. These are simple moving averages. You simply take the last 3 highs, add them up and divide by 3 and plot it on the chart. The only thing I do that's even marginally clever, and come on, it's not clever at all, is I just plot it one bar forward, because otherwise that moving average will be changing as this price bar fills in, and this way it's static. It's these 3 highs that go together to calculate that moving average of the highs, and these 3 lows calculate this moving average of the low. And then the next day we'll be trading within those, or the next, I say day, I shouldn't say day. This is a weekly bar, the next week. And for what it's worth, I'm going to talk about weekly bars and daily bars. You can trade this on anything you want. I've done trading on daily into hourly and 30-minute, and I've even done some 5-minute into hourly stuff, although that's kind of a young man's game. I'm a little too old for that. But at any rate, that's what's on the chart, a 3-period moving average of the highs and a 3-period moving average of the lows. And let me apologize. I'm going to call these different things. I'm going to call it the moving average of the highs and the moving average of the lows. I'm going to call it the upper band and the lower band. I'm sorry, I'm inconsistent. It's just the way my mind works. They're not different. It's the same thing. I just call them different things. And the other thing I keep on most all my charts, and this is pretty much on any chart, regardless of how I'm trading it. The other thing I keep on my charts is down here at the bottom. This is a 5-period moving average of the moving average of the lows. My goodness, it's a 5-period RSI, and the RSI is just a standard indicator, just like Wells Wilder designed it in the early 70s, whenever he did. And I use a 5 not because there's anything magical about that number, but because it wiggles a lot. And I want it to. I want to see a lot of wiggles in the indicator. The reason for that is I can filter out a signal that I don't like, but I can't filter out a signal that isn't there. So I want it to wiggle a lot. I want it to go up and down and show me stuff. And so that's why this is on the chart. The moving average of the highs, 3-period moving average of the lows, and a 5-period RSI, standard stuff on all of this. So what do we do with this? We get this bar, which again, we've defined this as 125% of the average of the last 14 bars in terms of range, closing in the lower 25% of the range and closing within 25% of the low. And I think it's pretty clear all of those criteria are met here. So when we do that, we go down then to a lower time period. In this case, this is a weekly chart. We're going down to the daily chart. And again, I want to repeat, I'm showing you weekly, daily. Doesn't matter. You can use whatever time period you like. And then what we're looking for now is divergence in this RSI. Now, let me say before anybody jumps to conclusions, divergence by itself is kind of, it's about 50-50. It's not that great a signal. But what divergence tells us is that the momentum may be slowing in the market. And so when we have a time when we think it might be a good time to look for momentum slowing, then the divergence can be a rather important signal to us. So what we had here, this is the JP Morgan, we were just looking at the weekly chart, this is the daily chart. We have this low here in the indicator that coincides with this low. The market turned back up. We have an up close here, which turns the indicator up. And then the market comes down and makes a new low, but the indicator does not. I know these are really close and they're kind of hard to see. I can promise you this low here was 7.6 in the RSI, and this low here was 8.2. I was watching it, I know. So we have divergence. We have a new low, and the indicator has not confirmed that new low. But this is very important. We only know that once the indicator turns back up, right? Because this indicator could possibly continue down and eventually not be divergent to take out this low. So once this indicator turns back up, now we know it's maybe a good time to buy this market. So you could get in on this price bar, because this price bar has to close for the indicator to turn up. You could get in on this price bar here, and as you can see, there's a nice little move up through this. Now, what I tend to do is I tend to use the width of these bands and some factor of that to determine both risks and targets. And I'm going to be a little vague on that because you can use it however you want. I'm usually somewhere around 2 to 3 times the width of this band for both the stop and target. I figure if I got a stop and target that's equal and I'm right more than half the time, I'm making money, and it certainly seems to work that way. So maybe even a little better than that. But that's what I'm using. I'm looking to buy because I've got this turn up in the indicator. And again, we use options. We will buy a call option at this point. Doesn't mean you have to. The underlying market could be bought, and this is a stock. It could be a futures market. It could be anything. It's valid regardless. It's just a chart analysis, and anything you can chart should work reasonably well with this. So this was a trade in JP Morgan that we were able to catch and ride up for a bit of a pop here. Now I'm going to do something really, really unusual, I think. I'm going to show you a trade that actually didn't set up. And I love the fact that it didn't set up. This may be my favorite part of this methodology. I mean, we're looking in to buy a market that's dropping. This is the TLT, which is an ETF that represents the long-term US Treasury bonds. Now, I'm sure everybody knows the Fed has started raising interest rates, and they were threatening to do it before they started. So this market has been in a prolonged downtrend. It just looks bad, right? Well, here's an exhaustion bar. Our system tells us that if we have an exhaustion bar, that's a time to look to buy, right? So is that stupid? Well, maybe it is, but there's the weekly exhaustion bar. You go down to the daily, we never get divergence. They just keep going down, keep going down, keep going down. And this low here is the lowest low in the indicator. We do not get a divergent low. Now, this actually cut off a couple weeks ago, I think, when I put this together. They've gone lower since. And I usually, on a weekly divergence, a weekly exhaustion bar, I usually follow them for 2 weeks. After that, I think they've kind of wore off and new price action is coming in. But after 2 weeks, I stopped looking for the divergence, and we simply did not get divergence here. And I love that. I love the fact that it kept us out of trouble in this, because boy, one of the things when I first started trading, I'm sorry, I'm going to bore you with an old man trader story here. When I first started trading for a living, I had a work ethic. I felt really bad when I wasn't trading because how am I going to make money? I'm not doing my job, right? Boy, it didn't take me long to figure out that the trades I didn't take averaged just as much to my bottom line as the ones I did. I only want good trades. I don't need action. I mean, if you want action, go to Vegas. Pretty girls bring you drinks, and it's so much more fun. In this case, I hope we're trading to make money. That's the whole idea. And I can't make money in trades that are wrong. So anyway, I know this is weird, but it kept us out of buying this market, and I love that. It's one of my favorite things about the methodology is that a lot of times, strong market down, we'll get signals, but we won't get entered. I think that's really cool. That's one of my favorite parts of it. Show you another situation, and I'll try to show this more like it was occurring. This is Nike stock, and this is a weekly chart of the Nike. And we come down here and we get our exhaustion bar here. It is 125% of the average of the last 14 ranges. It's in the lower 25% of the range. And I think we can all agree this really looks ugly. I mean, we had a swing low back here that we've now broken down from. We had a sideways pattern here that we broke down from. That's an ugly chart. Anybody who knows chart analysis will tell you that market is in a downtrend for sure. But we go look at the weekly and look what happened here. I'm sorry, the daily. That was the weekly. This is the daily chart. And we have a low in the indicator that matches this low in price. Price turns up and gives us a turn up in the indicator. And then price turns down to make a new low. The indicator does not. This is pretty clearly above where the previous swing low was. Once that indicator turns up, which it does on this little inside bar, we have reason to buy this market. And as you might imagine, I'm showing you a good one because this is what happened after that low was made. So even as ugly as that chart looked, we still were able to catch a little bounce out of that. And that's all I'm really looking for. Personal bias here, I'm not really good at taking big long-term trades. I'm pretty good at identifying when a market should bounce one way or the other. I'm not real good at saying we're going to go up for 3 months or 6 months or something like that. I know guys who make a lot of money doing that. I just haven't found that I'm very good at it. So I wouldn't say I'm incredibly short term, but I just don't. I know where my strengths are, and long-term trading isn't it. And if I could digress for a minute, that may be the most important thing you can find out about yourself. Whatever type of trading you're doing, particularly when doing your own trading, boy, you've got to find something that's compatible with your personality and temperament. I mean, it doesn't make any difference if a system makes $1 million if you're incapable of executing it because it's too uncomfortable for you. You're better off with one that only makes 10,000, but you can actually do it because that's real money. And I can't tell you what suits your personality and temperament, but I can tell you it's a really, really critical part of you being successful as a trader. The other thing I will say about this particular methodology is utilizing multiple time frames, seeing a setup on one time frame and then going down in a fractal sense to look at what's happening on a lower time period. I wouldn't tell you you have to do that to be successful. There are good systems that use a single time frame, but boy, that's a big advantage. Yeah, when you do it properly, you're often able to get the risk identified on the lower time period while you're actually participating in a move that's occurring on a higher time period. And that's just wonderful. When you can get really favorable risk reward and probabilities in your favor, boy, that's just ideal. And since I mentioned probabilities, let me give you one more thing, just sort of in general about the way I approach markets, whether it's with the PMT or anything else. I always want the probabilities in my favor. And I want the risk both quantifiable and controllable. And if I'm missing any of those things, I would just rather not trade. It doesn't bother me a bit to let the market go without me because I know the bus runs all the time, right? The market will be right back. We'll get another opportunity. And in this current market and condition, when you're trying to buy, oh, I'm getting wrinkles from sitting on my hands. I don't mind. I'm not losing money doing that. And I would rather wait for the proper opportunity. So that's just sort of a philosophy of mine that I'd like to impart with you. Again, probabilities, that's what we're trading. We're not trading certainties. Those don't exist. You got probabilities. Charts are a representation of the mass psychology of the participants of the market. So right away, you shouldn't count on it to be really logical, right? Because we're talking about people in mass psychology. But you get probabilities. You can develop things that tell you what is likely to happen within reason, but you can't get certainties. You can't be right all the time. Although I will be honest with you, if I ever find a way to be 100% certain, I'll trade it for 2 years and you'll never hear from me again. But that's probably not going to happen. At least it hasn't happened in the last 35. We trade probabilities and we need the risk quantifiable and controllable. When those three things are lined up, I'm all for it. I'm a pretty aggressive trader at that point. If they're not, then I'd rather just not trade. And it doesn't bother me a bit to sit and watch the market go until I see exactly what I want to see. So that's about all I have to tell you about this particular component of the PMT and the way we employ it. I'm sure I've left stuff out, so I'll sit right here. Any questions you have, feel free to toss them out and I'll get John to feed them to me.
All right, fantastic, Lee. Yeah, guys, if you've got questions for Lee, go ahead and post them and I'll relay them too. Let's see. Someone is asking, how many trades are you likely to get in a week or a month?
Well, let me answer that a couple of ways. I mentioned that the methodology could be used on almost any market in any time frame, so there's no way to answer the question as it relates to that. If you're talking about the specific PMT that we trade with the weekly and the daily, and using options to do so, I think we wind up with about 3 to 4 trades a month on average. John, your track record will probably show that better than my memory, but I think we do something like that, which important point, we're trading a lot less frequently right now because we have a very uncooperative market. We have huge volatility, which makes the risk just out of sight. And so we're being cautious and not trading as frequently. And that's an important thing for you to understand. If I say 4 trades a month, it might mean we have 7 or 8 one month and 1 the next month, just because of the way the market conditions are. But I believe, and John, you can correct me, I think on average, we're about 4 a month.
Yeah, I believe we'll get into the trade academics, but I believe it's somewhere around 4 to 6 trades per month on average.
Okay. Yeah.
And let's see. DJ asks a good question. Is this a long only strategy?
This particular component I'm showing you is, yes, it is long only. And I'd like to address that. I've done far more research in my career than I've done trading. And I would love for buys and sells to be mirror images of each other. I mean, there's a certain logic to that they should be, but they're not. And the reason is what I just mentioned to you about charts actually being a representation of mass psychology. People, when they buy, if we assume that you buy because of greed, that's not a fair statement, but let's say it is. So you're buying and you want to buy some and it's working and you want to buy some more and you're working and you want to buy some more. People do that. You build into a position, you buy it, you buy it, you buy it, it all looks good, we keep buying. But when they want to sell, they don't do that. They get fearful to sell, fear and greed. And when they're fearful, they say sell now, sell everything. And so markets do not go up and down the same way. They're not mirror images of each other, and you really need different techniques to try and take advantage of that. At least that's my opinion, of course.
All right, great. And Marco asks, when do you take profits?
Well, what you do in the PMT is we have uh, both stops and targets that are based on a function of the width of those bands on the daily chart. And I should make that clear. We're trading off the weekly exhaustion bars, but we get our risk off of the daily chart. And we use somewhere between 2 and 3 times the width of those bands for both a stop and a target. That way, it lets the volatility of the market tell us just exactly what's in it, rather than being arbitrary, saying we're going to take $2, $3, whatever. We allow the volatility of the market to tell us what is likely to occur. And so we're looking for roughly 2.5, 3 times the width of those bands as a target.
Okay, great. And it says, Dorcas asks, in getting the 5 RSI, one to the right, how do we express that in the computer setting?
Okay, I'm sorry, I may have confused you on that. The RSI is just the normal RSI, just like Wells Wilder developed it. You just, on whatever software you're using, if you set it to 5 on the close, you got it. What I displace one bar forward is the moving averages. And I know not all software is identical, but that's usually what they have. They have a function where you can displace it, and that displacement is either positive or negative to either move it forward or back. And it is the moving average that I displace forward a bar. And again, that isn't really necessary. It's just you have to keep going back to the previous bar as a new bar is being created to get the proper reading. That's the only reason I displace it. But it's the moving average that's displaced forward, not the RSI.
All right, great. And John asks, is this an extension of your max fractal system?
Well, yes, this is a component of it. I mean, this is exactly what well, marketing guys like to make terms up like this, but it is. It's fractal in nature because we're looking at the weekly chart and then going down to the daily to see what's happening as that weekly appears to be exhausting. That's the fractal nature that creates the max fractal setup.
And are you trading weekly or monthly options?
Well, I don't know how to answer that. Let me answer you this way. What we do is at the time we get a signal, we are looking for an option that's probably at least a month out in terms of expiration. Like we're May 11th as we talk today, so we would probably be looking at a June 17th option, and then we're looking for uh, something near the price of the bands that we're trying to buy by, and we're looking for specific prices in the options. We try not to buy options that cost more than $6. We like low price options. There's really nothing magical about that. A $5 option just doubles a lot easier than a $10 option does. So we try to keep the risk under $6 per, and then it becomes a little bit of a guessing game. It's not a guessing game. It's just we have to use a little judgment when we go look at that option to see what can we get that fits our price parameters. Where can we be? How far out do we have to go? The expiration will be a little more than a month out. Then the pricing of the option tells us whether the strike price can match the band we're trying to buy or a little higher or a little lower. Depends on the option. But I don't really understand the question of otherwise in terms of weekly or monthly options. We're trading an option, a call option, that's about an expiration of a month out.
All right, perfect. And LB asked a question. I think this will actually dovetail well into the next part of the presentation, and that is what would be the win/loss percentage of all the trades. So LB, I'm going to cover that now. We'll get into the performance of the precision trade alerts here. So I'm going to switch back over from Lee back to me.
Thanks, guys.
And yep, appreciate it, Lee. And we'll have time for questions again at the end, but I do want to keep us moving along here. Okay. And guys, just make sure now that you can see my slide. It should say introducing Lee Gettis, and now Q&A session with Lee, which we did, and some questions here. Can you guys see the slide again? All right. All right, so remember we said everyone is here for a reason. We talked about that earlier, right? The fact that you're here says, you know, everything may not be going according to plan, right? As far as your financial life goes. Maybe you're a new trader, you know, you're struggling, you're not profitable, you need help. Ask yourself, would this help? Would partnering with Lee Gettis help you reach your goals? Maybe you've got years of experience trading, but you've never achieved the kind of numbers that we're talking about here today. You know, would partnering with a professional like Lee help? Would it help to see how he has successfully been helping others like yourself reach their goals faster? Or maybe you're trying to build that retirement, but you realize, you know, 10% per year on average in a mutual fund, you know, when you've got a decade left before retirement is not going to cut it. You know, would getting a return of over 50% or 100% help? And for those, maybe you just don't have the time to do this yourself. Maybe you work full time or you're busy running your own business. Would it help to have Lee's trades sent directly to the broker who would execute the trades in your account for you? Would that help you? So as you think about that, let's go over everything that you get with the Precision Market Timing Trade Alert service. So let's talk about the academic guidelines. Some of you guys had questions. This PMT is an approach that uses, as Lee expressed, multiple time frame analysis, right? That's that fractal analysis, and two separate components or methods of analyzing and trading the stocks. The first component looks for extreme weakness on a higher time frame and then drops to the lower time frame to see if there are signals to that the downside momentum is slowing. If it slows enough, or if he looks for that divergence, it suggests that the stock might be ripe for buying. He'll find a call option that is reasonably priced, like he said. The strike price very close to the support price of the stock, under $6 and preferably even under $5. He also makes sure that the options aren't too thin, right? So liquidity to be able to get in and out is of importance. The second component is based on the complete opposite momentum. And that's something Lee hadn't talked about today, but he looks for an indication that the stock has a fair amount of upside momentum and then looks for a pullback against that momentum to enter. His vehicle for entry, again, is a call option, and he uses the same criteria as the above that we talked about when identifying strike price and liquidity and everything to purchase. Doesn't have a hard limit on how many positions he could have open at the same time, but 3 to 4 at a time is about all that he can comfortably manage. Again, this is a long only strategy, buying calls only. Trades an average of 4 to 5 times. I think I said 4 to 6 times, 4 to 5 times per month on average. Again, can carry up to 3 to 4 positions at one time. All right, let's get into the performance numbers here. This is based on a $10,000 account size. Okay, and the allocation is a maximum of $1,200 per trade. These numbers go from January of 2018 through April 6th of this year. And in that period, that 10,000 turns into a net profit of $238,666. That's a return on capital of 2,387% over that period. All right. If we're looking at the average annual percentage return, you're talking 562% per year on average over that period. Guys, think about what would that kind of return do for your retirement? Or if you're looking for monthly income, based on a $10,000 account size, he's averaging $4,600 per month. Right, that's insane. The win percentage, 78% winners. That's quite a high win rate. Even so, you see the average winner of $577 is still larger than the average losing trade of just $420, right? And that helps give you a nice, smooth equity curve. All right, some fantastic numbers. I think you all would agree. All right, everything that comes with the service. So you get direct access to Lee, any educated trading questions regarding the markets, the methodology. All right, you can ask Lee. The trade alerts and the daily recaps to your email or your cell phone. So when the alert goes out, you get alerted through your phone or the email, and you can then take that alert, place that same exact trade in your own account. You do get all the educational material that comes with the service, describing the entry rules, the exit rules, the money management rules. And we do offer access to third-party registered brokers. Right? This is an option, again, for those who don't have time to self-trade and they want the broker to execute the trades on their behalf for them. So it can be completely hands-free. And then you get access to us here at FFR Trading and our team. What we do is, again, we evaluate traders and their strategies. All right, they go through that certification process before they're allowed to trade for our clients. And we also then build portfolios of strategies. So we have over 20 different strategies and a number of different traders trading 20 different strategies. So we can build a portfolio that is diversified. So you're not all in just in stocks or options on stocks. You've got maybe commodities, maybe you've got Forex, and rounding out your portfolio. All right. So the offer we have for you today, Lee Gettis, the terms of the license, it's a 1-year lease. The PMT program fee, all right, it equates to as little as $208 a month. An added bonus today, anybody that signs up will also receive the free 30-day alerts to his O-Force trading system. O-Force is up 80% already this year. All right, so you'll have 30 days access to that. You will get a free copy. So we're gonna pick five folks from the webinar here, and you will receive the Precision Market Timing book. Everybody is gonna get the copy of Lee's special report, Lee Gettis on Day Trading. All right, what you need to do, all right, you need to give us a call. I'll put up the numbers here. We need to make sure this is a good fit for you, right? This is not for everybody. So if you are interested, you want to hear more, right? We just need to speak with you again, make sure this is a good fit. The first 3 that call and move forward will receive an additional 20% off the Precision Trading Alert Service. Plus, you still get the 30 days of the O-Force. We do need to call. We do need you to call to speak with you to make sure this is a good fit. Answer any questions that you have. Make sure you understand everything. I know this, guys. If you don't do anything, right, nothing's going to change. Nothing in your financial world changes. You have the opportunity to catapult yourself into the top 10% of traders in the world by following Lee in his precision market timing. Why wouldn't you take that step? If this is something that could change your financial life, why wouldn't you take that step? All right, any last questions? Yes, Marco, O-Force, Lee's other program, even in this choppy, crazy market, right, is up 80% as of the end of the first quarter. Randy, the signals are given. This will be call options, right? It's trades long only. Yeah, Shandu, you can give us a call and we can give you the breakdown of all the numbers if you're looking for 12-month data and so on. We'll give you the breakdown. Just give us a call. All right, guys, so if you're in the US, call the 800-883-0524. Outside the US, you can call this 832-404-2420. All right, if you just want to utilize email, it's support@ffrtrading.com. That'll get you to us. That'll get you to a strategist that can help you sort that out. Russell, did I see your question? Let me go back and see what was your question, Russell. What was the win percentage over 12, 24, and 36 months? So Russ, give us a call so we can go over the numbers in detail with you. All right, that's the best way to do that. No, it's options. Yeah, options on stocks, Randy, not on futures. Now, Lee did say you can use this if you're going to trade this yourself. You can use this strategy, probably on whatever market and time frame that you want. But most people are going to want, to have Lee and this service, done for them rather than trying to do it themselves. Chris, is there a preferred sector or exchange? Again, give us a call, Chris. We'll tell you which third-party brokers work with the program, and you can even speak to those brokers, ask them questions, and so on. All right, guys, let me go ahead and do the giveaway. So I'll pick 5 names at random here, and those people will receive a free copy of Lee's Precision Market Timing book. All right, so let me pull up the list of attendees here. All right, so I've got Randy Peterson. Okay, you'll be getting a free copy. And Robert Bruning. You'll be getting a free copy of Lee's Precision Market Timing book. All right, Saul Brewer, if I pronounce that correct, Saul. You'll be getting a free copy of Lee's Precision Market Timing. We've got 2 more. Russell Hallam. And finally, Rogelio Guerrero. All right, you'll receive a free copy of Lee's Precision Market Timing book. So congratulations to those that stayed till the end. Each one of you will get a copy of that book. We'll send that out to you via email, I believe. That'll go out. All right, guys. I think that's it. Let me just pick up any last questions. Yeah, you're welcome, Robert. You're welcome, Randy. All right, guys, appreciate your time. And again, give us a call, 800-883-0524 or 832-404-2420. First 3 callers are going to get a 20% discount. Again, we just need to speak with you and make sure it's a good fit. All right, guys, enjoy the rest of your day. Look forward to hearing from you, and we'll see you in the next presentation.